Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to cover CVS. This is a big healthcare company that both runs pharmacies as well as healthcare facilities. It's a really good company to consider in a recession where healthcare is going to be stable and produce good revenue, good profits, and good cash flow. I've been an investor of CVS for 3 years and wanted to go through and update my analysis on the company. And that's what the video is going to cover. My investment scorecard that I use involves 4 questions followed by 1 action item. The first question, do I want to be in the industry? Second, is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock so my investment goes up in value. Based on the answer to those questions, I consider and make a decision to either buy, hold, or sell that particular stock. So I'm taking a look at the most recent earnings release, which was for Q3 in 2022. And a couple highlights there. I like that the revenue is increasing at 10% for the quarter. They did have a opioid-related charge for litigation. They were involved in the whole opioid pandemic or epidemic, excuse me. And they have to pay litigation fees as well as some settlements, I'm sure. Year to date, their revenue is up more than 10%. Just really good revenue growth for such a large company. They generated really good cash flow, which is really the basis of my valuation. And they raised their full year guidance at Q3 going into Q4. Over the last 5 years, CVS has produced about a 14.44% return if you held the stock. But keep in mind, you're getting paid a dividend each year. It did hit some pretty good highs. It hit close to $110 per share at one point. And it wasn't too long ago that it was hitting those highs, but it has come down more recently. Over the last 12 months, it's gone down 19.66%. And what's interesting is more recently, it's been consistently going down. And that's while tech stocks and the NASDAQ has really been booming in 2023. So if everything checks out, this might be a really good time to buy on low dips. I value companies based on free cash flows. And based on my calculations, I believe right now CVS is being sold at a discount of 129%. Let me show you how I got to that number. I first start with cash flows, and I took their current cash flows they've produced for the first 3 quarters, annualized it, which means, divide by 3 times 4, and I got to $21.4 billion as a starting point. They have been consistently growing, and therefore I'm going with an 8% growth rate for years 2, 3, and 4, and then long-term growth rate of 1%. So those are conservative enough to use in this model. I went to Finbox and got their weighted average cost of capital, and that's 10%. And that's a good rate to go with. Again, conservative number. Based on those entries, I get a valuation of CVS of $264 billion, but their current market cap is $126 billion. Therefore, it provides 129% discount. You can compare the value per share and the stock price that it's currently trading at. Their debt to EBITDA, I decided to use EBITDA plus cash. It gives me a ratio of 2. And the reason for it, they had some payouts for that opioid-related legal charges. I believe those are going to be one-time fees. I think going into 2023, that's going to be in the rearview mirror, and in the future, they won't have to deal with that any longer. So CVS, their performance, they've had consistent revenue growth. I really like that about CVS. They continue to grow year after year, so that's great. They pay a nice dividend, 2.7%, and they have a free cash flow of 17%, which is really good. Their PE has gone up to 37.5, and that's principally because of all those one-time charges that have taken down their earnings. My guidance for 2023, consistent revenue growth. The healthcare is going to be a very good place during a recession. People go take care of themselves, whether it's a boom economy or a recession economy. If you have to go to the doctor, you go to the doctor, you go get your medicines, and you spend money at CVS. This will be a solid performer in my portfolio in 2023. My outlook, long-term, stable growing company. This is one of the companies that I put in there. It's boring, but it keeps my portfolio in the green. These guys are the best in their industry. CVS, I believe, is the best run pharmacy / healthcare company. I think consistently they've outperformed Walgreens and others in their space. I think there's some high upside in the stock, and you're going to be paid a dividend, which is nice to get some interest like cash flow out of this investment. So taking a look at the scorecard, is this an industry I want to be in? Absolutely. Healthcare is a nice, stable industry. I have a portfolio of stocks. Some of them are tech stocks, like I have Meta, Google, other stocks that are high tech and probably are riskier. I like having a healthcare company in my portfolio. Actually, I have two, so that is kind of an anchor to the portfolio, along with some other low risk industries. I believe CVS is the best in this space compared to their rivals. Debt is less than 3 times EBITDA, and there's a very good discount on the stock currently. Therefore, I'm going to be buying more shares of CVS at these prices. Well, thank you so much for watching my video. I really appreciate it. I hope you found it interesting and maybe discovered something new about CVS. Please keep in mind, I'm not recommending you buy CVS stock. I like sharing my experience as a small investor, and I own shares in CVS. Thanks again for watching. Good luck investing in 2023.